Okay, so there's been a great picture on partnerships, particularly from Arvid and now Manish and Rajiv. So now I'd like to welcome Jakob Rost. He's the founder and CEO at Ayoconnect. And Jakob, I'm really interested in learning more about how you actually activate this, about the value of the open finance APIs, and in particularly in this part of the world.
Thanks, John. Yeah, great to be here. Warm welcome from my side. I think in the next 20 minutes, happy to share a little bit about how we see open finance developing in Southeast Asia, particularly in Indonesia. Maybe quick introduction on my side. I'm the CEO and founder of Ayoconnect. My background is in financial services, fintech, and e-commerce. And Ayoconnect is an Indonesian open finance platform that has evolved to become the largest API platform in Indonesia. We are on a mission to power the leading companies of today and tech unicorns of tomorrow. And the way we really do this is that we have a wide range of APIs that power embedded financial solutions and data solutions that really enable our customers to launch anything from payments to banking services on their platforms. And the most exciting part is that this can now be done in a matter of weeks versus previously having to spend months or even years on building it in-house. So maybe just to set the stage, every company will be a fintech company. That's a famous quote that has been around for a while yet, but we do believe this is really the guiding principle of open finance as a whole. So it's not just about new fintechs that are coming on that need to make use of plug and play embedded financial solutions, but also existing ecosystems, traditional companies that are realizing that they want to monetize their customer base, they want to launch financial products to their customers, and that's sort of the trend that we've seen globally. It is now starting to also happen in Southeast Asia. I think some of the first generation unicorns have set the path there, and now we see many more even smaller companies following that trend. So just to give an overview, when we say open finance, open banking, those are some of the terms that get easily thrown around. But in our opinion, what we realized, it's all about use cases. So open finance is really just a means to an end. But I think what's more exciting is to have real tangible use cases behind it. So just to give a brief snapshot of some of the real solutions that are out there in other parts of the world. It's like if you go to Walmart today and you check out, there's a firm, one of the buy now pay later unicorns behind it that takes care of this. If you're a neobank or any sort of fintech that wants to launch its own digital debit card, then there's the likes of Galileo and so behind it. If you're a Shopify merchant, you can push a button and it creates a bank account with you within minutes. You buy a card, comes with an insurance bundle, or you're using a personal finance manager that asks you to tap into your credit card spendings and various bank accounts in order to pull the information and give you an overview of where your money goes. I think those are the use cases that we at Ayoconnect are very excited about, and those are the use cases that we want to see being built in Southeast Asia. But we're not launching them ourselves. We stay in the background. We're really concentrating on building the relevant infrastructure for those kind of use cases, so that any fintech can essentially launch them in the near future. And if you look a little bit on open finance, particularly open banking, it's really a global success story, starting all the way in the US with the likes of Applied, who are the pioneer of sorts. I do think they started even before the term open banking was really around, and then it spread successfully across Europe with the likes of Tink and TrueLayer. We have a lot of companies that we see coming up in Latin America. So we're very excited to bring this to Southeast Asia, and we feel there's still a big player missing in this part of the world. So we have the ambition to become this player. Having said that, it would be too easy to say that open banking is a concept that works similar in all the markets. I think, as most of us know, Southeast Asia is a very unique market in its own right, and things work differently down here. So that's essentially where we spend a large part of our day-to-day to really customize and localize open finance solution to the demands of the local market, and also really try to figure out of what makes sense given the circumstances of the local market and the condition down here. So kind of like, how do APIs power embedded finance, and where's Ayoconnect in the value chain? Basically, we like to stay in the background, we like to stay behind. From an end consumer perspective, they would never know that they're using services or solutions that are powered by Ayoconnect. Our job is really to make our partners successful and basically help them monetize and drive retention on their platforms. So if just to give an example of what's already out there today, if you go to a mom and pop shop in Indonesia and you do a phone top up, and then there's a good chance that Ayoconnect's APIs are behind it. If you go to any of the large e-wallets or mobile banking apps and you do a water, gas, electricity payment, then that's powered by Ayoconnect's APIs. If you opt in for a subscription payment with the largest banks in Indonesia, then that's our tech stack behind it. And more open finance applications like open account statement, balance APIs, direct debit, digital products, and the likes of this. So we like to be sort of like the technology infrastructure provider. But we stay in the background and we let our customers actually, get the shine of launching the products. And we're very humbled to say that we have more than 200 API customers today in Indonesia alone, and those include, most of the large banks, most of the financial institutions, mostly lenders, peer-to-peer companies, multi-finance companies, but also insurance companies. Almost every consumer-facing tech unicorn is using Ayoconnect's APIs today, one way or another, with the likes of Bukalapak, GoPay, and Financial through their e-wallet and other e-commerce platforms. But a lot of the demand that we see coming from the local ecosystem today is actually from more early stage companies in the fintech space, but also beyond. So those are like Series A, B, and C companies that need to move very fast, focusing on their core business model, but wanting to get access to financial product in the process. But also what we call local champions. Those are companies that have been around for decades, such as like Postal Service of Indonesia with 50,000 branches, and even contracts with the government sector and its own. So I think there's a lot of good progress in the open finance space in Southeast Asia, particularly in Indonesia so far. But maybe what I want to spend the rest of the time on is to look a little bit, give an outlook of where we see the market is going, and some of the patterns and trends that are happening on the ground. And I think the starting point is really to understand, a lot of good progress has been made in the digital ecosystem and digital economy as a whole in Southeast Asia, and particularly Indonesia as the largest market leading the pack. So I think most of us know that, structural entry barriers that we had to deal with in the past, such as, internet usage, smartphone penetration, and so on, that's mostly ticked off. There's a very young population. More than 50% of Indonesians are under 30 years old. So there's a high interest from a very curious consumer base to try out new things, to use embedded financial solutions on third-party platforms and so on. And we have seen also record investment rounds going into the sector here, where funding rounds have surpassed every single year previous funding years. So I think all of this is good news for the ecosystem. But having said that, there's also still a lot of challenges that remain in the financial sector. And most of them are known. I think it's not a surprise, especially for people who have been in Southeast Asia on the ground, that there's still a big lending gap. There's a $60 billion number that famously gets quoted on reports and in conferences, and that's a credit gap that currently formal supply can't really cater to. On the savings side of things, we see people still put cash under their bed and their pillow at home in very unsecure locations. So there are needs there. And then on the payment side, obviously large challenges remain with a bit more than half of the population being unbanked and then not having bank accounts, and still cash economy being a big part of the global of the GDP of Indonesia. So I think while those numbers are known, what's more interesting for us is what are the key takeaways here? What's the message? And I think there's really two learnings for us. And the first one being that there will not be one company in Indonesia that can solve all of this. I mean, in fact, we have seen incumbent banks being in the marketplace for decades, and we've also seen a wave of new digital or fintech players, especially, for instance, in the peer-to-peer space, coming into the marketplace over the last years. But yet, those numbers have remained relatively stable or haven't really changed on a large scale. So I think for us, the key takeaway is that there will also going forward not be one company that manages to solve it all, but South Asia is just very diverse in many dimensions, and that's where we will see companies that do certain things very well and just focus on a target audience, and that's already happening today, right? We have sort of like companies that build great tools for SMEs, and they get to go to market right, and they are able to sign up large ecosystems of SME large number of SME players. We see agri-techs companies getting built that really nail the value proposition for farmers and fishermen and the likes of that. We see digital banks coming in, focusing on Generation Z and so on. We will see in the future apps that might be focusing on the Muslim population and so on. So there's always a different value proposition on your core model behind it. But by basically being able to nail this, that's how you essentially manage to build your ecosystem and then essentially offer financial products that will reduce those shortcomings. And I think the second learning here is also that we're seeing a new generation of companies being built in the ecosystem that are building their businesses very different than what the first generation of unicorns had to go through. They had to build a lot of infrastructure technology themselves, and that took years and a lot of resources to do so. And we cannot expect the next generation of companies to have to potentially even acquire companies or businesses or license anything they want to launch a feature on their platform. And that's where I think through the progression of open finance and the platform and the infrastructure that we in Ayoconnect built, we will see companies moving much faster by just being able to plug and play into financial products and launch them on their ecosystem in a very fast time. And that's ultimately what we want to power, what we want to drive, and what we want to see, and where we're working very hard, to drive those changes in the marketplace. And just to give a couple of color, like who are those, new players that will basically disrupt the landscape and the digital landscape here. And so, as I mentioned earlier, there are SME players, and there's already anything from 7 to 8 million digital SMEs that are claimed to be acquired by those companies with a GMV of over $4 billion USD. Those are the likes of Bukukas, Warung, Pintar, and so on. They've all very large funding rounds, moving very fast, very successful. We see new insurers that have been built over last few months and years. They're claiming to have acquired more than 500,000 of agents, processing more than 90 million transactions per month. So very good traction on that side. Wealth tech is extremely exciting. There's a large space of a large number of people doing stock trading, crypto trading, and so on. So companies like Ajaib, Bibit, and so on that have acquired accumulated more than 10 million customers, and it's still growing very fast. And then there's the whole sector of social commerce that is expected to actually surpass the traditional e-commerce sector, and there's a lot of enablers there. So basically any platform, and that's coming back to what I mentioned earlier, every company will be a fintech company over time. If and this is a snapshot, there's other examples, as I mentioned earlier, Agritech and so on, but all of them will need digital account opening. All of them will wanting to give lending products, whether in the form of a consumer loan, a working capital loan, factoring, invoice financing, supply chain financing, and so on. Credit scoring, obviously very important in that sense. Other payment products, both receiving funds, dispersing funds, and anything around income and employment verification. So this is where we see on a day-to-day basis a lot of the demand is coming from. There's not a week that goes by where we are not getting approached from either a newly founded startups where the founders are looking to solutions to anything, one of the leading tech unicorns that are also trying to optimize the way they do things and reducing basically the resources they're putting into non-core products. And I think that's very exciting, and we're actually expecting this to still accelerate. After all, it's still very early in the space here. And we also see a profound change actually in the way the value chain is reshaped through embedded finance. So to give some example on the distribution side, if you are a bank, right, then traditionally you're focused on your own distribution channels, whether that's a mobile app, you have branches, you have relationship managers that are going out there, where the way we see the trends currently working is that those own channels remain, but they will be complemented by large ecosystem players, tech players that you partner with directly or through platforms like Ayoconnect, and in the future even more adjacent financial service providers, right? Whether that's ERP SaaS or sector specific players that actually can drive a lot of your new customer onboarding and help you gain market share as a bank. So we do see the demand coming from both sides, not just from new fintech players and companies that want to embed financial services onto their platform, but also from the supply side, from the banking side, from financial institutions that are looking for new ways to expand market share and partner. On the data side, obviously historically a lot of done on premise, in house. Trying to work with traditional financial services data, credit scores, and so on. This is where even today already there's a shift by partnering with ecosystem platforms where the data or consumer behavior and customer insights that are generated on the third party are actually tremendously helpful of gaining new insights, new perspectives of customer behavior, customer cash flows, incomes, and so on. So why not put this together and actually create better data than you were able traditionally? I think that's definitely an improvement where we see on the lending side more loans being able to be processed, pricing of loans being able to do reduced, risk factors equally being able to reduced by being able to see cash flows of for instance merchants, SMEs, and the likes more transparently. Moving on the balance sheet, we don't see too much or expect too much change yet. So financial services obviously being the license holder and dispersing, for instance, loans on balance sheet is most likely to continue. A few platforms will try to do on balance sheet in the future, but I think a big value proposition of embedded finance is actually not having to deal with this and being able to just focus on your core platform, while financial institutions can focus on what they're traditionally good at by keeping loans and doing the underwriting on balance sheet. And on the platform itself, so as we know traditionally, we saw very bespoke on-premise platforms, minimal touch point to clouds from financial institutions and banks. Obviously, that's not going to go away entirely for various reasons, but we do see that there's a shift already where financial institutions are more open to use SaaS solutions and more cloud enabled products, whether that's on the back end or some of the front end and so on. I think especially Indonesia, if I can add, has also come a long way there by having more on the ground data centers. And I think I'm almost out of time, but just to wrap it up, how we see open finance APIs change the digital landscape in the near term. So big demand from both sides of the value chain, and that's really where we as Ayoconnect try to bridge it. Where if you're a bank, you basically realize that customers might interact 2 to 3 times on average with you currently per month, but on financial on platforms, it might be as much as 1 time daily, and that's basically where you won't need to be with your products if you want to be more seen and in front of your future customers. We also see that ecosystems actually in Indonesia, some of the large tech players already have onboarded 30 to 50% of the country's population. So again, even a big segment coming from unbanked, and I think unbanked is overall still a big problem in Southeast Asia, with roughly 200 million people not using bank accounts, and you have underserved SMEs that go as high as 2/3 of the SMEs. While on the other side, from the fintechs and platforms, partnering with a bank through the likes of Ayoconnect is definitely helping them to monetize their user base more. And a lot of the revenues that we see from platforms is actually coming from those added financial solutions and products on their platform. It definitely drives volumes, and it creates more stickiness, more of a lock-in for customers, especially in Southeast Asia, where we see the profitability of tech companies is rather low, and financial services are still overall very high margin compared to maybe some other geographies around the world. So yeah, I'll leave it there, and happy to answer a few questions.
Yeah, thanks very much, Jakob. Great insights there. I think the key aspect that I can see is there is still very much a last mile problem across Southeast Asia, and in Indonesia in particular. So enabling both the born digital startups, whether they're in financial services or another industry. So you mentioned agritech and SME players. They still need to be able to. They may provide a service digitally, but they need to collect payment and access and also identify their customers, and so they have all those challenges. And then the traditional companies that they may have a base and they may be serving some customers, but there are lots of customers that they have not been able to serve effectively due to the cost value equation. And so being able to onboard those to connect with their customers is really important. I don't know, it's also your comment about relationship managers in the traditional financial services model, that the relationship manager is probably not going to go away, but in order to scale, because that relationship manager model is not really scalable. In order to scale, you're really looking at partnerships to help you to reach those customers that haven't actually had much connection to the financial ecosystem yet. Just quickly, because I know we are short on time, but what's your experience in actually onboarding those different players? Because I would imagine that the born digital ones pretty straightforward, but the other ones that not yet digital or only starting in the digital chain, and perhaps still collecting cash from their customers. What's been your experience in onboarding those players?
Yeah, great question, John. And if I may add to what you just said, I mean, we've seen exactly what you just described, and this has actually accelerated, especially in the last 12 months in Southeast Asia, right? So I think it's still early on the whole open finance development, but things are starting to accelerate and move very fast on both sides, right? Demand coming from the platform players, but also banks being more open now and seeing the opportunity that actually partnering with fintechs brings to them. On the onboarding side, it can be anything from a couple of days. We've had that to months and even more than 6 to 8 months. It really depends, sort of like what kind of stage you are. I think if you're a fintech player and you have a high demand for a certain solution, you can certainly move fast. But if you're a financial institution and bank, it's not so much even the tech integration. It's also all the bells and whistles and red tape around it. You want to make sure you're good to go on the regulatory side. You want to make sure that things like data privacy, data storage is properly checked. You want to make sure that everything regulatory wise checks out and so on. So that's where we have come a long way in really understanding the needs of different players, traditional companies versus fintechs versus banks and financial institutions, and have shown that we managed to onboard partners across those different verticals. So that ultimately, I think, makes it much easier for now new partners to come in from the same sector that can basically already leverage a lot of the good work that has been done by our first partners from a year or two ago.
Great, that's great insight. Thanks very much for sharing, and great to have you back at API Days Singapore.